I'm about to tell you how to save money on your mortgage payment. Now, this strategy only works for a certain group of people. And in order for this to work, four things have to take place. So, something I see that's causing homeowners a lot of issues with their mortgage payment is something called an escrow account. So, your mortgage payment is broken down into different pieces. You got principal and interest, then you got PMI in some cases, and then you have property taxes and homeowners insurance. The property taxes and homeowners insurance is your escrow account. That is where your property taxes and homeowners insurance are broken down into 12-month increments and put into your mortgage payment. Once there's enough in that account, your mortgage lender will then pay your property taxes when they're due, and they will do the exact same thing for your homeowners insurance. The problem is most of these mortgage companies do not do well with setting up and maintaining these escrow accounts, which then cause homeowners to be short. And then when a homeowner is short in their escrow account, their mortgage payment goes up, which happens a lot with new construction. But it also happens just in general because these lenders just do not do a good job of maintaining these escrow accounts. With all that being said, a way to save money on your mortgage payment is to remove your escrow account. Now, you got to have a conventional loan in order to do this. And most loan servicers want you to have at least 20% equity in the house. Some do, some don't, but you just got to call your servicer and see what it is that they require. You also cannot be short, which means if your escrow account is jacked up, you got to bring it to zero. Make sure you don't owe the servicer anything. And then you can remove it in most cases. But again, you got to have a conventional loan. That's one way to save money on your mortgage payment. If you are buying a house, you can just opt to not have an escrow account, but you have to be using a conventional loan or a VA loan. The USDA loan doesn't allow this, and the FHA loan doesn't allow this either. And most non-QM loans don't allow it unless you put 20% down. Instead of paying your escrow account in your mortgage payment, what you can do is pay your insurance company month by month, or even pay 6 months or 12 months up front using a Capital One credit card or something like that, so you can get points. You can do the exact same thing with your property taxes and get points and get paid to pay the same thing you would have been paying had you put it in your mortgage payment. You also need to be disciplined, and you also need to be able to save money and put it to the side so that you can make this payment. Because if you don't, you're going to cause yourself way more problems had you just put the escrow account in the mortgage. What do y'all think about this? Drop a note in the comments.